Hey people, I welcome you back to Caroline's Online Academy. In this series of videos, we are learning the various concepts involved in accounting for issue of shares in companies. In the previous video, we solved a couple of pro rata problems, but I thought it would be better if I created a separate video to help you understand what pro rata allotment is and the concept of excess application money. And that is what we're going to be doing today. So assume in a company called X Limited is inviting applications for 1 lakh shares. But the company got 1,40,000 applications. And assuming the applications were from only three people, let's say A, B, and C. A applied for 90,000 shares. B applied for 40,000 shares. And C applied for 10,000 shares. Now, in all, the company has received 1,40,000 applications, but it cannot go ahead and allot 1,40,000 shares, right? Because the company has only invited 1 lakh shares, and the company can only allot that many shares that it has invited applications for, according to the Indian Companies Act. So it cannot go ahead and allot 1,40,000 shares, and therefore it will have to decide on to whom the shares are to be allotted. So this is a case of oversubscription, and the company has a lot of choices. It can do whatever it wants to do. Like it can allot a certain number of shares to A, certain number of shares to B, and certain number of shares to C, and reject all the other applications of those people. Or, for instance, in case one, it might allot 50,000 shares to A, full 40,000 shares to B, and 10,000 shares to C, and allot 1 lakh shares in total. In case two, it might do something different, like it might allot 70,000 shares to A and 20,000 shares to B and 10,000 shares to C and allot 1 lakh shares. Or in a different case, it might go ahead and allot, it might allot 50,000 shares to A and 90,000 shares to A. It might reject all the applications of B and allot 10,000 shares to C and allot 1 lakh shares in all. Likewise, it can do whatever the company can do whatever it wants to do. It can reject as many number of applications of any applicant and also allot as many number of applications of any applicant. This I've already discussed when I first, where does a company get the power to reject the applications made by the applicants is discussed by me in the theory part, which I already taught and had uploaded. You can go ahead and refer to it. In the process of issue of shares, I have discussed that. Anyway, because to put it in simple words, it is like when the applicant is actually making an application, he's only making an offer in a contract. So the company has the right to accept the offer and get into a contract with the shareholder, or reject the offer and deny to get into a contract with the shareholder. Anyway, so the company has the rights to allot shares in whatever way it wants to allot. Now, whenever the company rejects certain number of shares outright and then allots only a certain number of shares, then the company has an option to what the company does is it it refunds the application money received on the rejected applications. For instance, if you take case three, the company has allotted full all the shares of that A had applied for. He had applied for 90,000 shares and he had been allotted 90,000 shares. And the case of C had applied for 10,000 shares and the full 10,000 shares had been allotted to C. Whereas for B, he had applied for 40,000 shares, but B has been allotted no shares. Am I right? So what the company will do is it will refund the application money received from B on the 40,000 share. Assume the application money was 20 rupees per share. So B will be given back 8 lakh rupees, the money that he paid as application, because the company is not getting into a contract with him and it has rejected all the applications made by B. Understood or not, my dear children? Likewise, in this situation, A had allotted asked for 90,000 shares and made 90,000 applications, so he would have paid 90,000 into 20 rupees, 18 lakhs. Whereas he's only allotted 50,000 shares, so the extra 40,000 application that A has made is excess application, and that will be refunded to A if the company goes ahead with case one. Likewise, for case two, it will refund the money on the excess applications. Understood or not, my dear children? Now, this is what we have learned till now. When you come to pro rata allotment, what happens is the company, instead of rejecting applications of any particular shareholder in a random manner, it might go ahead and allot shares on a proportionate rate. The rate proportionate to the number of applications made by the shareholder. Like in our example, A applied for 90,000 shares, B applied for 40,000 shares, and C applied for 10,000 shares. In total, we have 1,40,000 shares. Am I right or not? I'm going to make a small change here in order to make it easier for us. So assume B applied for 50,000 shares, and in total we have 1,50,000 shares. Or B applied for 60,000 shares, and we have 1,60,000 shares. This for the sake of division multiplication. Understood? All right. So C applied for 60,000 shares, and we have 1,60,000. B applied for 60,000 shares, and in total we have 1,60,000 applications. But we only have 1 lakh shares to allot. Am I right or not, my dear children? So what the company can do is it can find out the proportion, a ratio of the applications of that particular applicant to the total applications. For instance, here for A, it is 90,000 is the application made by him, and the total applications are 1,60,000. So the proportion is 90 into 90,000 divided by 1,60,000. If you cancel this, you get 9:16. Likewise, if you do it for C, it is 6 by 16, and when you do it for C, it is 10 by 16. Understood or not? And this 1 lakh shares can be divided amongst these people in that ratio. The ratio of 9:6:1. Actually, it is 1. It is not 10. 10,000 divided by 1 lakh is 1. So 9:6:1. So what they will do is this 1 lakh share will be divided in the ratio of 9:6:1 amongst A, B, and C. And thus, every single shareholder who's applied for shares has got some shares allotted to him. So nobody is getting cut out from the company. If you see in the previous example, if you see, in the third case, B was completely cut out from the completely cut out from the company. All his shares were rejected. He was not allotted any number of shares, which means that he's not going to be in any relationship with the company. Whereas when it comes to this, when the company is making pro rata allotment like this on a proportionate basis, every single shareholder has got some shares allotted to him. Am I right or not, my dear children? For instance, if you look at A, he's been allotted. Just give me a second. Yeah. If you look at A, he's been allotted 1 lakh. Sorry. Yeah. So when you look at for A, if you see, he's been allotted 1 lakh. He'll be allotted 1 lakh into 9 divided by 16. That many shares will be allotted to him. So that is actually how many, my dear children? 56,250 shares. Likewise, if you see for B, the number of shares allotted would be 1 lakh into 6 divided by 16, which is 37,500. And for C, it will be 1 lakh into 1 by 16, which would be 6,250. And if you add all the shares, you will get 1 lakh shares. Understood or not, my dear children? So A is applied for 90,000 shares and he's got 56,250 shares. B is applied for 60,000 shares and he's got 37,500 shares. And C is applied for 10,000 shares and he's got 6,250 shares. Understood or not, my dear children? Now you can see nobody is actually getting completely rejected. Everyone have got some amount of shares allotted to them. Am I right or not, my dear children? So if you look at the excess application money, excess applications made by A, it is actually the 90,000 applications made minus the number of shares allotted to A, which is 33,750. And for B, it will be the 60,000 applications made by him minus 37,500. That is the extra applications he has made. I mean, B has asked for 60,000 shares, but he's been allotted only 37,500 shares. So he has actually applied for 22,500 shares for which he was not allotted. So they are extra applications on which shares have not been allotted. Likewise, for C, if you see, he's asked for 10,000 shares, but he's only been allotted 6,250 shares, which means he has actually applied for 3,750 shares extra, for which is not been allotted. Ideally, what is the company supposed to do? It is supposed to refund the money on the applications on which the shares have not been allotted. Am I right or not? For instance, A has applied for 90,000 shares. He was only allotted 56,250 shares on pro rata basis. So what the company is supposed to do is it is supposed to refund the application money received on the 33,750 extra applications made by A. Am I right or not, my dear children? But as we have allotted shares to every shareholder in the company, as we have allotted shares on pro rata basis to every shareholder in the company, what we are going to do next is all A, B, and C have become shareholders of the company. What we are going to do next is we are going to make the allotment money due. Am I right or not? And allotment money, when we make due, what will we do? We'll tell A, B, and C to pay allotment money on the 56,250 shares for A and 37,500 shares of B and 6,250 shares of C. That is the allotted shares. On the allotted shares, we'll tell them to pay the allotment money. Now, we have 33,750 shares of applications of A, for which we have to refund the money. So in case we decide to refund the money on these applications, that is 33,000, assuming application money is 20 rupees, 33,750 shares into 20 rupees will give you 6,75,000. And assuming your allotment money is 30 rupees, what we will actually be doing is we will refund 6,75,000 and then get back 16,87,500 rupees from A. So basically, what are we doing? We're giving some money back and immediately asking A to pay some amount some amount as allotment money to us. So that doesn't make sense, right? What would make sense? What we can do is we can tell A that you see you applied for 90,000 shares, but we've only allotted 56,250 shares to you as we have allotted on pro rata basis. And therefore, we have 33,750 applications of yours for which we are not allotted any shares. And that is whatever money you paid along with that, we're going to consider it as excess application money. And this excess application money actually should be refunded to you. But now that we have allotted shares, 56,250 shares to you, you have to pay us allotment money now. So instead of refunding this excess application money to you, why don't I set off the 6,75,000 excess application money that I have against the allotment money of 16,87,500 that you're supposed to pay and collect only 1,12,500 rupees from you. Understood? I'm sorry, 10,12,500 rupees from you. Only the remaining amount I'll collect from you. Instead of giving you the 6,75,000 from you, I will only I'm collecting 16,87,500 as allotment money. I'll only collect 10,12,500 from you and keep that 6,75,000 you already gave. I'll add it to the allotment money that you're supposed to pay and adjust it against your dues of allotment. Likewise, for B, what they will do is on the 37,500 shares, sorry, on the 22,500 shares, we have an excess application money of 4,50,000 and allotment money due as per our example, it is 30 rupees per share, is 11,25,000. So instead of collecting 11,25,000, refunding 4,50,000 and collecting 11,25,000, what we can do is we can just collect 6,75,000 for allotment. And similarly, we can do the same thing for C also. So what exactly is happening here, my dear children? Instead of refunding the application money on the rejected applications, we are keeping that excess application money received from the shareholders and adjusting against the allotment money due. Now, how is it possible for us to adjust against allotment money due? Because we have not rejected any shareholder outright. We have not rejected all the applications of any shareholder. We have rejected some applications of all shareholders as we have proportionately allotted shares to all the applicants who have applied for the shares. That is called as pro rata allotment. We have made pro rata allotment. So every person who has applied for shares have got some shares and become the shareholder of the company and is supposed to pay the allotment money. And that same person has not been allotted all the shares that have been that is asked for. So he would have made some extra applications and therefore would have resulted in him paying some extra application money for which he is eligible for refund. So this guy is also supposed to pay his allotment money as he has been allotted some shares and is also eligible for refund on the extra applications for which we didn't allot any shares. Am I right or not? So he is supposed to pay us and we are supposed to refund the excess application money. Instead of doing that, what we do is we set off that excess application money against the allotment money. Now, if you ask me if it is compulsory for us to set off every time against excess application money, no, that is not true. It is at the company's discretion. The company can decide to refund the excess application money and make the allotment money due and receive the allotment money entirely, or the company can set off the excess application money against allotment only, or if there is a lot of money, then the company can set off the excess application money against allotment and further calls due. So the company can choose to do whatever it wants to do. Understood or not, my dear children? There are no hard and fast rules as to how the company should go about doing it. But for all the purposes of CBSE, if you see, from the question, you can understand. I hope you understood what pro rata allotment is. It is we are allotting shares in the proportion in which the applications were made by the shareholders instead of outright rejecting all the applications of any particular shareholder. We are allotting shares to everyone in the proportion in which the shares were allotted. For instance, A has applied for 90,000 shares, B has applied for 60,000 shares, and C has applied for 10,000 shares. So what we do is we find out the total applications, which is 1,60,000. So the proportion in which A is applied to the total application, the ratio of A's application to the total applications is 90,000 is just 1,60,000, which turns out to be 9 divided by 16. And for B, it is 6 divided by 16. And for C, it is 1 divided by 16. What we do is we take the 1 lakh shares that is available and multiply that with the ratio of the applicant's application to the total applications of the total applications made by the company. That is 9 by 16 for A, 6 by 16 for B, and 1 by 16 for C. And allot shares to everyone. So we are basically not rejecting anyone completely. We are allotting some shares to everyone. That is proportionately allotting some shares to everyone. And therefore, everyone has made some extra applications. At the same time, everyone has got some shares also. So they're continuing to be shareholders of the company, and therefore they're supposed to pay us allotment money. At the same time, as we've rejected some applications of those shareholders, they are also eligible for refund. So that extra money that they are eligible for as refund is called as excess application money. For instance, in A's case, it is 33,750 is the total number of excess applications that A has received. How we computed that is he applied for 90,000 shares and 56,250 shares only has been allotted. So he's made 33,750 extra applications, and assuming 20 rupees was the application money, the total excess application money available in his name is 6,75,000, and he's also supposed to pay 87,500 rupees as allotment money as per our assumption. And instead of refunding the 6,75,000 and receiving 16,87,500 from him, we're just setting it off against 16,87,500 and only receiving 10,12,500 from A. Understood or not, my dear children? So basically, what we are doing here is setting off the excess application money against the allotment money due, and that is only because every shareholder has excess application money, and every shareholder has also some it's also become every applicant has also become the shareholder of the company and therefore is supposed to pay the allotment. And this situation is possible only in a case of pro rata allotment. The 6,75,000, 4,50,000, and 75,000 here are the excess application money that is available. That are the excess application money that is available because of pro rata allotment, and that is what is set off against the allotment money due from all of these shareholders. Understood or not, my dear children? Now, in a different case, in a scenario wherein you completely reject someone's shares, for instance, in this case, B has applied for 40,000 shares and we have completely rejected all his applications. We have not allotted any applications, any shares to B. Now, what happens? B is not supposed to pay us, B need not pay us allotment money anymore because we have rejected his application. He's not our shareholder anymore. He need not come back and pay us allotment money. We have no right to ask allotment money from him. So we cannot use the 40,000 into 20, 8 lakh rupees received from B. We cannot use that money to set off against the allotment amount due from A or C. Am I right or not? They are different people. These applications have been rejected and is completely cut off from the company. He has no relationship with the company. And as I've rejected his application, I'm supposed to refund I mean, when I say I'm talking about the company. The company is supposed to refund the application money to B. Whereas in the case of pro rata allotment, every shareholder has got some shares, and every shareholder of certain applications have been rejected. So they are supposed to pay us allotment money, and we also have some excess application money that they have paid us, which we set off against each other. And which so there is a provision, there is a possibility for us to set it off against each other. Understood or not, my dear children? Now, should the company set off like this? It is not compulsory that the company has to set off like this. It can, refund the application money and then make the allotment money due, and excess application money and make the allotment money due and receive the allotment money. But that is not how it works, right? Because it's logical and practical to set it off against the allotment amount due. And that is what we will be learning in the upcoming problems, my dear children. We learn how to account for this excess application money in the first place. We receive application money, so we pass the journal entry bank to equity share application. After that, we transfer the application money received to share capital. Now, the application money received cannot be entirely transferred to share capital when pro rata allotment is made, because certain applications have been rejected. Usually, in a oversubscription case, when there is no pro rata allotment, we will reject the application money on the rejected applications will be refunded. However, when there is pro rata allotment, we have to set it off against allotment, right? So we need to account for it in such a manner that we credit share allotment account with the excess application money, or calls in advance account with the excess application money to the extent it is available, and then we set it off against the further calls that we are going to make. Understood? Now, how we are going to do that is what we will understand through the example problems that I will be teaching you further in the further videos, in the upcoming videos. I just want you to understand what pro rata allotment here is, and what excess money or excess application money here is in from this video. I just want you to understand those two things. What pro rata allotment is, and what excess application money is, how to set it off, how to account for, how to pass, what journal entries to pass in order to set off the allotment money due, and how to set it off, and all of those things we'll learn in the upcoming videos in the different questions that we'll be learning. Understood or not, my dear children? So with this, we have come to the end of this video. In case you've understood, please let me know, like, share, subscribe, and comment. Thank you so much for watching. You people have fun.